Hi guys, welcome to my YouTube channel House of Wisdom. Hopefully you are all doing great. I'm here with another video which is all about the capital budgeting or investment appraisal. I have seen many of the students doing this topic in finance. They were knowing the techniques, how you have to budget the capital, but they did not know exactly why they were doing so. What exactly the meaning of capital budgeting? So I'm here to resolve all your confusions and given a proper explanation of what is a capital budgeting. So the very first confusion students is having is whether is it a financing decision or is it another decision. So let me tell you, it's not about financing decision. It's not about where the company get the funds from. Should it get from banks or is it getting from public or through debentures? It's not about financing decision. It's all about the asset allocation decision, which means it's about the business decision. Which assets I'm gonna invest in, where I'm going to use my funds. It's all about fulfilling the asset side of the balance sheet of a business. It's about taking the decision which projects I have to select and which projects I have to reject. Whether I would go into this market for expansion or should I not expand my business in this market. Should I buy a new machine or I have to replace my old machine with a new machine? This is all about asset allocation decision to utilize your funds to bring highly productive assets. But what is a capital budgeting? As you see, it's all about the budgeting. That means forecasting. You are forecasting the future inflows and outflows regarding the investment. Why is it so? Because you have to see whether I will get a future returns from my investment or not. Therefore, you have to do this capital budgeting. Moreover, it's extremely important because every company is having a short of funds. Now, when you have less money but many choices, you have to be more wiser when you are taking a decision, because once the decision has been taken, there is no return from this decision. It is irreversible decision. Large amount is being invested. For instance, if you as an investor invest in real estate without evaluating the area, but later on you realized, oh, I have buy a house in certain area, but I did not know whether it is unsecured area or a secured area, but now you're having a security issues. So you want to sell it, but no one is going to buy from you. It is your bad decision. You did not evaluate the decision. You did not see the future impact of my decision. You have invested large amounts in a real estate in a certain area, but now you did not recover your amount. It's all sunk. It's not a casual decision. Capital budgeting decisions were long-term decision. It hurts you in a future. It's not about you went to a shopping mall and buying a shoe for yourself. After 2-3 months, if the shoe does not remain in the same condition, it does not hurt you much. Similarly, if you are invested in large projects, your heavy investments being utilized and you will lose all your investments. So think about before making decisions. That's why we all doing this capital budgeting. You're forecasting the future inflows and outflows so that you would see what returns I will get. Make sure that your returns would be higher than the benchmark that you have set in. Make sure that the interest rate you are paying for financing the funds which you are going to utilize in your investment of projects should be lower than the expected returns you will get out of your investment, because otherwise it is irrelevant if you have to pay 10% to the bank and also earn just 8% from your investment. So think about it. Make sure you have evaluating your future cash inflows so that you can see what my expected returns will be, so that the decision would be quicker and decision should be wise enough. In order to do so, there were certain techniques which being utilized by businesses in doing capital budgeting. These techniques were discounted cash flows, payback period, net present value, internal rate of return, and profitability index. All these techniques were crucial. I'm not going to tell you in this video. I'm just telling you the introduction about the capital budgeting, what is its meaning, why we are doing so, what is importance, and why we all need this capital budgeting. All these techniques being utilized. I will be coming in a next video with how you have to utilize these techniques in making your decisions. But for now, I'm just telling you what is a capital budgeting. Now comes the very important concepts related to capital budgeting. There were two kind of decisions: independent project decisions and mutually exclusive decisions. Independent projects decisions were the decisions which is all about whether to accept one product or not, whether to accept this project or not. It's all about independent decision regarding the project. But in the mutually exclusive projects, there were 2 or 3 or 4 choices you have, whereby if you select one, you have to reject others. Thereby we can say the acceptance of one project will hurt the acceptance of another projects that you also evaluated. This mutually exclusive projects were important when business is having short of funds but have many choices, so they have to make one choice while rejecting the others, thereby acceptance of one project reducing the chances of the acceptance of another. That's why we call it as a mutually exclusive projects, while independent projects does not hurt the acceptance of another projects. It's all about only independent project, whether you have invested in or not. It's all about the decision regarding the independent project. Now we have to see in what projects, in what kind of investment we are using this capital budgeting. So we are using this capital budgeting decisions in replacement projects, whereby you have to see, should I replace my old machinery with a new one, or I have to invest in such project for expansion or not. For instance, you want to expand your business, you have to choose the market for your business, whether you have to invest in India or USA. You have to see the demand and other criteria before see whether I have to invest or not. Or you have to introduce a new product. For instance, you've been in a beauty and care products business, you have a long list of products in your beauty and care, but now you are thinking about introducing a new product, for instance conditioners. So if you are invested in conditioners, you have to see the future inflows and outflows about the conditioners before making decisions. So all these kind of decisions about replacement projects, expansion projects, new products were regarding capital budgeting decisions. You need capital budgeting techniques to evaluate these decisions. Hopefully you like the video. If you like, Please like the video, share it, and subscribe my channel for future videos. Till then, bye.